Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 7th of May, 2020. And yesterday we published two videos. One entitled Financial News Market Update 6th of May, Watch for Jobs Report. And the second, Global Recovery May Start in Asia, not America. Then on Tuesday we produced a video entitled Gold and Silver Premiums Falling, We Told You So. And on Monday, End of Globalisation, Effect on Gold and Silver Prices. Now today, we're producing another daily update, as tomorrow is an extremely important day where the non-farm payrolls report is being announced. Now we've already seen both gold and silver rise today, to some extent in expectation or anticipation of tomorrow's announcement. But first, let's take a look at the numbers. And for US listeners, please bear in mind that US equity markets are not closed as yet, as we're producing this at 1920 GMT plus 1. But European markets are closed. So, with the US markets still open, the Dow Jones Index is up 290 points at 23,955. The S&P 500 is up 42 points at 2,890. And the Nasdaq is up 131 points at 8,986. Now, going back to the European markets, the Euro Stoxx 50 closed up 36 points at 2,880. The FTSE 100 closed up 82 points at 5,935. The DAX index closed up 153 points at 10,759. And the CAC 40 index closed up 68 points at 4,501, with European markets fully reversing any falls that some of them had yesterday. Now, Brent crude is up 26 cents at $29.98, and WTI crude is up 28 cents at $24.27. The dollar index is down 0.25 points, falling below that 100 figure, and currently rests at 99.83. Gold is up $31 at $1,721, and in sterling terms it's up £23 at £1,392, and in euros it's up 25 euros at €1,590. Silver's performed a little better, up 40 cents at $15.39. In sterling terms, it's up 31 pence at £12.46, and in euros, it's up 0.34 euros at 14.23 euros. The gold to silver ratio stands just shy of 112 to 1, improving on yesterday's position of 113 to 1 by 1 point. Now, yesterday, the ADP employment report declared that 20.2 million private sector jobs were lost in April, and more than 30 million people applied for jobless benefits in the past 6 weeks. Well, today we've seen the initial jobless claims report come in at 3.17 million, down from last week's 3.85 million, but higher than expectations of 3.1 million. Now, in our financial report we published yesterday, this is what we stated. Quote, now tomorrow we have initial jobless claims plus productivity figures for quarter 1 and unit labour costs for quarter 1. But the jobless figures are likely to have the greater impact. Any additional figure much above 3 million is likely to be detrimental to the dollar, but a report less than this may strengthen it further. Unquote. Well, it is a little above 3 million, and this has done exactly what we predicted. The dollar weakened, gold and silver prices rose. Productivity figures for quarter 1 came in at minus 2.5. I'll repeat that, minus 2.5%, compared with a positive figure of 1.2% the previous quarter. But even minus 2.5% was a little better than expectations, but not much. So, before we speak about tomorrow and the non-farm payrolls, plus its accompanying data, which includes the unemployment rate for April and average hourly earnings, let's look at the technicals for gold and silver. Well, firstly, gold's move today was interesting, as we witness a lower low and a higher high, which usually suggests what analysts call a trend reversal. But that said, we witnessed a weakening on the 10-year yield, which adversely affected dollar prices. Its rise today now suggests that the 20-day moving average is seen as support at $1,706, with resistance at April's high of $1,747. However, the medium-term momentum is negative, which suggests the possibility of lower prices. That said, if yields on bonds weaken further, we could actually see a small upward breakout of gold prices. Silver actually did very well today, approaching the 50-day EMA, which we suggested was a possibility yesterday. That said, there is considerable resistance ahead and support at the $15 level, with additional support at $14.80. Providing silver can stay above $15, which it will if gold stays above $1,700, then we could see a positive uplift in a couple of weeks' time as firms get back to work. That said, the non-farm payrolls will to some extent dictate short-term price movements. Last month's figures stood at minus 701,000 jobs. This month is expected to come in at, wait for it, minus 22.1 million. Anything worse than this will hit the dollar again and gold and silver prices will rise. However, anything close or below this figure could have the opposite effect. Now, a number of commentators are suggesting that equities are currently hitting a false rally. Now, UK precious metal dealer Bullion by Post produced the following editorial this very afternoon. And we shall quote this editorial. It's not that long. Quote, "After global stock markets have shown some signs of recovery in recent weeks, there has been talk of a potential bounce back for stocks following the most recent crash. Stock investors have been clinging to every bit of hope and every positive headline that suggests the economic damage caused can be undone. Positivity is generally good, but in the current crisis, a degree of realism is more important for investors struggling to protect their wealth. Faced with the scale of the economic downturn, any signs of a stock market rally seems based on the thinnest of hopes." On its own estimates, the European Commission now foresees the Eurozone economy contracting by 7.5% in 2020. This makes the current economic collapse equal only to the 1930s Great Depression. Latvian Executive Vice President of the European Commission, Valdis Dombrovskis, believes, quote, "the immediate fallout will be far more severe for the global economy than the financial crisis. The depth of the impact will depend on the evolution of the pandemic and our ability to safely restart economic activity and to rebound thereafter," unquote. This is coupled with today's forecast from the Bank of England that the UK economy is set to contract by 14% in 2020. March saw stock markets hit a 5-year low as measured by the FTSE 100. Most of Europe and America shut down. Since then, based on optimistic predictions, it has clawed back less than a third of those huge losses, unquote. That's the end of that article. We are indeed in interesting times, or certainly entering them, with Warren Buffett now having sold not just part, but all of his airline stocks. This would certainly suggest that the world's best known and arguably most successful investor does not have a great deal of confidence in a robust and speedy recovery. Otherwise, he would have held on to them. Now, what do you think? Do you believe that the economic recovery can be quick? Will tomorrow's jobs report have a profound effect on either the dollar or gold and silver prices, and if so, in which direction? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. not forgetting that we update our Richard and Greg channel every few days. And if you haven't already done so, please subscribe to that one too. And another update on that channel will be published tomorrow. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.